The big news story of the week is in Spotify. So they started the week cutting about 17% of its workforce. I think it was about 1,500 people. So not a pleasant Christmas for that core. Netflix, from next week, you can play Grand Theft Auto 3, Grand Theft Auto Vice City, and Grand Theft Auto San Andreas on your Netflix app. No extra cost for subscribers.
As of December 2023, now Zuckerberg's net worth is estimated to be about $115 billion by Forbes. 190 million off the table carries significance. They're wrong.
Hi there, and welcome to Stock Club, podcast brought to you by MyWallSt Street. I'm Mike, and joining me in today's show is MyWallSt Street's chief investor, Emmet Savage. Today's podcast is brought to you by Vodafone Business. I know if you're like us here in MyWallSt Street, you know that running a business is hard. There are countless things to think about, and many often simply get ignored or completely forgotten about. Well, that's where Vodafone Business can help. They've crafted a suite of tools and supports to boost your business operations, and the best part is it's free for everyone. From cybersecurity to harnessing the power of AI, building a website and improving how your teams work remotely, Vodafone Business will help you to address the often overlooked but crucial elements for your business's success. To get started today, check out their one-to-one VHub digital support and advice service. You'll find everything you need right there. Find the links in our show notes or simply Google Vodafone VHub for more details. Now, let's dive into today's episode. Emmet, how are you? How are you getting on?
Hi, Mike. How's it going?
It's all good. Now, this episode is going to be published the day of our Christmas party. I just want to ask you, what are you most nervous about?
Oh, you know what I'm most nervous about. John Tyrrell wants us all to jump into the Atlantic Ocean. So we're having a Christmas party in Galway, which is where your home is, Mike. And we all have to go for a swim, which I think is absolutely ridiculous. And as you can see, I get a bit exercised over the whole concept.
Well, this is a good one. This is a good one for the listeners now. I said to Emmet that I'd respect him more and it would show more bravery if he didn't swim and didn't cave to the peer pressure of the moment.
Yeah. Well, you know, I grew up in a Dublin town called Malahide, and my folks' house was by the sea, and I swam every day, 365. And then one morning, I just slept in, and I never looked back. I thought, wow, this is nice. That's very nice. Waking up naturally, getting up, having a shower, putting on your clothes, as opposed to doing that other thing. And I swore I'd never do it again. Then a few years ago, we did one for charity, and we all jumped into the sea in Dublin, and it was Baltic. And I swear I am not one bit looking forward to doing it in Galway, which is like Dublin, but -2 degrees.
Yeah. Well, I was in on Monday, and it was nice, but nice is very relative. Do you know that kind of way?
It is, yeah. I was going to ask you to double click on that word "nice." Like, what is nice?
Well, I was expecting to freeze over, and I was like, well, this is actually kind of pleasant. But I'm looking out now, and it's kind of blustery and rainy, so I don't know if it'll be too nice tomorrow. We'll see.
So as our listeners can hear, we really know how to have a good time at MyWallSt.
Yeah. Well, I'm just glad you didn't say the bill at the end, because you're going to be the one paying it.
Yeah, well, you know, that comes in second place. But honestly, I'd double the bill if I could stay out of the water. But you're right. Maybe I should just do the brave thing and go, I'm not getting in like a big spoiled baby.
All right. Okay, let's get into the show. And I think the big news story of the week is in Spotify. So they started the week cutting about 17% of its workforce. I think it was about 1,500 people. So not a pleasant Christmas for that cohort anyways. Is there anything noteworthy about the layoff, Emmet?
Well, for a start, I suspect there's about 1,500 fewer people with a free Spotify subscription. But Daniel Ek, this founding CEO, wrote in a memo posted online and sent to his employees on Monday. And he said, I realize that for many, a reduction of this size will feel surprisingly large given the recent positive earnings report and our performance. So really, there was a self-awareness that this isn't a good look. And it's the third time.
I read the document as well. Very blunt, will we say? Cutthroat seems harsh, but just very like, this is what we need to do for the business. And sorry,
I agree. I read it too, and I don't want to be unfair to an entire race, but to say I had a kind of Scandinavian bluntness,
directness,
if you like,
yeah.
directness, yeah. But it's actually the third time that Spotify's cut jobs this year, and It reduced its workforce by 6% in January, and then a following 2% there in summer in June. And as a result of the announcement he made this week, as you can imagine, there was quite a few cynical tweets because Spotify did their, what's it called, the wrap up, is it? The annual wrap
Spotify
up.
Wrapped, yeah.
Yeah, wrapped, and somebody kind of repurposed that infographic to show that you cut 25% of your workforce this year, and the employees most affected, like 2,300, and the department hit the hardest was marketing, and it did it just like the Spotify Wrap, which I thought was almost inevitable, but it was unfortunately well done. But if we look at the bigger picture, like the world, the number of tech layoffs was really front loaded in 2023, more in January, I suspect, than the entire second half of this year. It seems like in January, and I have a chart here in front of me, there was 108,000 and nearly 109,000 tech layoffs, and that came from Amazon, Google, Microsoft, Salesforce, IBM, all the big names. And
All
February had,
companies doing quite well as well.
oh, entirely. You would not encounter a name that you would say, yeah, that's frail. That business really is fighting to breathe. So January, February, March, between those 3 months had about 250,000 layoffs. Now, when you look at the last few months, now December has only started, so we're at 1,900, November 1,600, October 31,000, September 14,000. Like you basically see that it was Q1 where most of the damage for the year was done. But look, bringing it back to Spotify, the business, like all those other tech companies that grew in size during the pandemic, and its headcount doubled over the last 3 years to 8,000 workers. That's a big workforce. You know, when you look at Spotify, I think you could be forgiven for thinking what they've done is elegant. And with elegance comes a degree of simplicity. And with simplicity comes, well, not 8,000 people. And I think the main thing that matters at the moment out there in the tech world is profitability ahead of growth. We see that all the time. We see it in MyWallSt. I mean, MyWallSt for the first few years, our story was grow, earn trust, get the biggest audience possible. But like that's all fine as long as somebody's handing you a check. But what really matters now for every business is profitability ahead of growth. So, despite its efforts to reduce costs, X said that in that note that we both read, that Spotify is still spending too much money and that interest rate increases have made it more expensive to borrow. And here's another quote from that missive he sent. He says, "The Spotify of tomorrow must be defined by being relentlessly resourceful in the ways we operate, innovate, and tackle problems. Being lean is not an option, but a necessity." And actually, as it happens, the shares popped 8% on after the announcement. Did you see that?
I think it's indicative of wider investor sentiment, especially with the company like Spotify. And we'll get into the why the operating expenses are so important there. Is that I think basically all of Wall Street knows that tech got very bloated, and they need to see it cutting back, and they need to see it focus on the bottom line. Like Spotify is a huge business, and it's just turning over 30 million operating profit in this quarter. You know, it was losing 200 million a year last year. So
that's a fact.
It's really shifting the priorities from what you said, from growth to the bottom line. And I think it's very important that most tech investors realize that the shift has happened. And while some high quality business might get away with it, the focus isn't as much on grow at all costs or even growth at all, really. So yeah, for sure.
I heard a rumor, I would say about 2 years ago, founded on one piece of data or one anecdote. And as I said before, an anecdote doesn't make data, but that the big tech companies, Microsoft and the likes, were recruiting talent to stop the other guys get it. I mean, it was like vanity recruitment. So, and I heard it on a pretty solid, from a pretty solid source, someone who said they were recruited to stop them being recruited by someone else. So, when you're in that realm, you realize something has malfunctioned. But look, Spotify shares are up about 150% this year. They're still down from their high. So that's the layoffs, but you've been looking into it. What are your thoughts of it as an investment, Mike?
Yeah, so I thought this was worth diving into when when we were talking about Spotify, because I think a lot of people are going to be listening to Spotify for this podcast. You know what I mean?
Mm,
And you mentioned
mm,
it there, stocks up close to 150% year to date. And it fell as much as 80% between February 2021 to the end of 2022. So it still hasn't fully recovered. I think it's about 40% from all-time highs set there at the start of 2021. So this whipsaw in the share price isn't surprising. And then to see the company or the stock perform so well while it's going through
mm.
3 different sets of layoffs, if you were in the company as an employee and you're seeing the stock go one way and the staff count go the other, you kind of question things. But I think
Yeah,
that's the perennial issue investors have with Spotify is its cost structure. It's what Daniel Ek mentioned in the document that went out to everyone about the layoffs. So
mm,
I thought it'd be interesting to go through the company and see what's changed, but more importantly, see what's the same. And the number one criticism of Spotify has always been that it can't control its costs. So its main expense is artist royalties, and these, of course, scale along with how many streams an artist gets.
mm.
Typically, with a software business, you'd have relatively fixed costs, and then scaling is where you make that high margin income because you've spent all your money on whatever else, cloud servers and all the tech involved and all the staff and everything else. But if you add one more customer, there's no real additional cost to that. Just setting them
Yeah,
up
yeah,
small bits.
totally.
That's
Yeah,
not the case with Spotify. It doesn't really
really.
act like a normal software business. So Spotify's gross margin is in the mid-20s and has been for a very long time. And even on top of this, so it's spending so much money on artist royalties. But on the other side of that, artists hate Spotify because they pay peanuts as well. So not only is it getting squeezed, but it's also doing some squeezing itself. So
Yeah.
it's not even like it can really cut into what it's already paying because it's already so low. So I remember we were talking about this recently, Emmet, with the Porter's Five Forces, and one of the issues was
Yeah.
the buying power of your customers. So Spotify is
Yeah.
in an awful spot here. So it's a distributor essentially buying content
Yes.
off record labels and distributing it to its users. So those record labels are incredibly powerful, which is why Spotify's margin performance has been so poor, especially for a software company. Like, I don't know,
Yeah.
it's a software company, but it kind of isn't either, especially its cost structure. So between the big 3
Well,
record labels, Universal Music Group, Sony, and Warner, they control about 80% of the market. So if we're talking about
mm,
buying power, that's not the 3 customers you want to have at
no
all.
way. No. I mean, never until now did I look at Spotify as a two-sided marketplace. It just didn't occur to me. But you could almost argue that it's no different to Etsy. There's people knitting nice jumpers on one side and buyers on the other. But instead of jumpers, we're talking about, obviously podcasts and music. But it really is a double-sided marketplace with crushing powers on both sides. And that is, I suppose, a perspective that I'd never latched onto. I have a question for you. Are you a paying Spotify member or are you Apple Music? Which one do you use?
I'm paying Spotify, and I don't think I would change for a significant amount of money. I
That's
love it.
very
It's
interesting.
one of my most used apps.
Yeah. Now, the reason that's interesting to me is I always looked at Apple Music as a perfect substitute. Coming back to Porter, the fact that we have I thought right over there is the exact same thing, same tracks, the same podcasts, the same playlists, and so on. But it's very funny. Last night, my older son said to me, I'm on Apple Music and he's on Spotify, which is highly inefficient, by the way, for a household. But he said he would never swap. I was like, what are you talking about? It's the same thing. So it's not a perfect duopoly. They're actually, it seems that Spotify is really differentiated in the minds of its customers, such as yourself and such as my son. So what is it that
Yeah.
has it so sticky in your mind?
Yeah, well, it's an interesting conversation because we probably don't give Spotify enough credit. Like
Hmm.
Apple completely dominated the music market, iTunes and all the rest. And this little
Yeah.
Swedish startup came in and completely took share. And like its biggest competitors now are Apple and Amazon. And if you throw YouTube in as well. So
Oh, yeah.
Apple, Amazon, and Google, like
Yeah.
the 3 biggest companies in the world, and Spotify is the one leading the market. So in
Wow.
that sense, I think it probably doesn't get enough credit as a business story in Spotify,
Mm,
probably because the situation it's in now, where it hasn't really kicked on from that. It's still stuck with kind of the same problems, and maybe that's why Apple didn't defend itself as much as it could have, because it saw that
mm,
it wasn't the most lucrative market. I'm not sure, but
yeah.
yeah, in terms of actual using Spotify, I think there's so much. They do create curated playlists. They kind of tell you what to listen to next, which is the beautiful thing.
Yeah.
So like
Yeah.
using, yeah, I
Yeah.
remember I used to have Discover Weekly every Monday, and then out of the 30 songs, 15 would get added to my already new playlist or whatever else. So there is so much, and you can see as well that Spotify have been trying to remedy the gross margin issue around royalties for a long time. So they got into
Mm,
podcasts heavily. Now their execution on that strategy wasn't great, given Prince Harry and Meghan
yeah.
Markle 20 million quid to make one podcast or something like. But
Yeah.
they saw a route of saying, all right, well, we have music, but why not get all of audio? And they've pushed into audiobooks as well. I think they're trying to add audiobooks as part of just your general subscription, which is great.
Mm,
Um, but I don't see Spotify not being dominated by music at the same time. I think those are ancillaries.
yeah.
They're
Yeah.
not going to be the main product. But even Daniel Ek was really pushing into this AI generated music.
Yeah.
Not like Elvis singing Tom Jones songs, but like lo-fi study music beats
Oh,
that
yeah.
Spotify could produce itself. And so that
Yeah.
would be streams without royalties, which would be huge for the business. But in the end, it is going to be dominated by these huge record labels and big names. So yeah,
Yeah.
it's always going to be that negative on the stock, and I don't think it's going to be able to come out of it. But I had a
Yeah.
quick kind of look through the numbers and basically saying, why is the stock up 150% year to date? Because it's doing something right. Now there is definitely the whipsaw effect. It fell so much from the start of 2021 to the end of 2022 that it had to bounce back.
Mm,
And I think in
mhm.
general, my consensus is that the market is always overreacting in one direction. Do you know
Yeah.
what I mean?
Yeah. Yeah.
So the
Yeah.
negative wasn't that negative in 2022, and the positive probably isn't that positive this year. But
Yeah. Sure.
momentum always feeds into it. But there is a lot of sorry, there's a lot of positives to highlight, because the stock doesn't just go up
Yeah.
150% in 11 months either. So
Yeah.
they're getting huge growth in active users still, 26% year over year in the last quarter. Some operating profits of 32 million this quarter compared to a loss of 230 million last year. Free cash flow went from 35 million in 2022 of Q3 to 216 million in its most recent quarter. It's now sitting on about 4 billion in cash and about 1 billion in total debt. So balance sheet's very healthy. Gross margin is at 26%, which is actually a positive, would you believe? It's up a couple of percentage points over the last year. And
Yeah.
this is probably actually the highest it's been in over the last 5 years. Thereabouts, anyways. It's always been that low.
Mm,
And probably most importantly, when we're tying this back to the layoffs, is that operating expenses were down 13% year over year. So I think this is where Daniel Ek is going to find those efficiencies. This is going to run the business. He's not going to turn it into Ryanair or anything, but to
mm.
really cut down and probably just accept that, okay, we're a low margin business. We have to act like
Mm.
it. Do you know?
Yeah. But you know,
Airlines. No,
yeah,
sorry,
you
go
are.
on.
But sorry, on that point, sorry to cut across you, but it's like Spotify, on being a low margin business, it is it is a utility. And what I mean by that is not that the price doesn't matter, but that it is one of the last things you would cancel in your life. So when you look across the gamut of monthly outgoings in your life, I would say most people who have a Spotify or indeed Netflix subscription will put it in the top 10% are the ones least likely to cut, because we all aggregate these recurring bills monthly, yearly, whatever it is. But the utility of that is so high is so like it's the last thing you'd cut. Like I always believe like one's attachment to your music is analogous to perhaps your religion. It's a deep-seated um emotional connection with something. So your Spotify, when that business is getting more and more efficient in the ways you described with AI, and it's landing the perfect tune at the perfect moment, or the perfect vibe at the perfect moment if you're studying, it actually becomes a deeper part of your day to day, week to week, year
Mm.
to year life.
And
And
there's huge
yeah,
sunk costs as well. If you go, I'd say I have 50 playlists made.
yes, exactly.
They just go
You'd
up in
have to
smoke if
abandon
they're
them.
gone. Yeah, huge
That's a
switching
very
costs.
good point as well. But if you look at like Starbucks, high volume, low margins. Like, I mean, it's just throwing you well, actually, probably decent margins in Starbucks case. But the theory of coffee is that you're throwing out as many cups as you can make in a day, and they all have a small margin, but you're doing enough of them, and that's the Spotify effect. It is the coffee house of music, so to speak.
Yeah, and I think that's where it's going for, and definitely reading what Daniel Ek wrote about it.
Mm,
It's maybe just deciding that, yeah, okay, we are a low margin business, and because of that, we're
yeah,
going to have to run such a tight ship and operate in some senses like supermarkets or airlines or wherever else, where they
yeah.
have to pinch pennies to make the machine work, basically. So that's the bull and bear case, and I don't know if I'm even more confused after putting it out, because I think there is perennial issues, but
Yeah.
there's also so many positives, like we said as well, and especially
Mm.
around just how users talk about it, how I talk
Well,
about it,
when
how your
you
son talks about it.
yes, and when you take the everything into account, I don't think anyone would doubt that it will be around in 20 years. The only reason Spotify won't endure is if it's bought out. That would be my view. So if one of those tech giants go, hey, look, let's just leapfrog. Let's if Amazon said, look, our efforts haven't been all that great, let's do a Paramount Studios on this. Name your price. That's the only reason why I believe Spotify won't be around in 10 or 20 years, because it has such a deep-seated purpose now, and a deep-seated customer base, that it will endure. So when we look at X latest letter or the last quarterly results, we're applying a very tight filter to a giant picture. And I think the giant picture is we're looking at a brand that we all saw, like Airbnb. We all saw the brand arrive into our lives, and it will be there long after we've let out our terminal breath.
Yeah, yeah, no, it's true. But I also think, I don't know if it makes a great acquisition target. If you're to
What's its
buy it at
market cap?
its market cap's just shy of 40 billion. So if you're
Yeah.
to add, let's say, 50 billion for for
Yeah.
how acquisitions go and the premium on it,
Yeah.
you're talking about what, 50 times free cash flow. You know,
Yeah, yeah, it's a big price tag, and you're also. But again, these giant techs often usually don't price things like that. They just
yeah,
say, right, this now is just getting deeper into the home, or to the pocket, or to the phone, or whatever it is, and so that's how they probably go about that. But that's not to say that I think will be acquired. I don't. I think Eck, and I think Spotify. Eck will keep Spotify independent. He's certainly got a clarity of
yeah.
vision.
The only acquisition that would make real sense is if one of the studios bought it.
Oh yeah, totally.
If
Yeah,
Universal Music Group or Sony or Warner Music Group went and bought it, I'd say there'd be antitrust issues out the wazoo
oh
over
yeah,
it. But
yeah, yeah,
there would be where you would actually see some synergies, and you could see some genuine improvements in the margins.
yeah. That's true. But then you see, back to Porter's Five Forces, the other studios would suddenly have a very strong leverage, because they're like,
Yeah,
well, you've got your catalogs and we've got ours, and by the way, you don't have Grateful Dead anymore, or
yeah, yeah,
whoever.
yeah, yeah.
But yeah,
Okay.
it's a fascinating one to watch, and I know we've probably beaten it to death, but I don't think there's a stock investor who hasn't considered Spotify and looked at it and can assess those multiples and its position. I have looked at it 1,000 times, and I continue to do so.
Yeah, it's just such a day-to-day brand in people's
Yeah,
lives.
yeah.
But again, there's so many question marks. Yeah, it's a really interesting business to talk about in this sense, but I don't think the picture is
Yeah.
any clearer for me anyways.
Yeah, I mean, for me, long-term buy would be a yes, but I acknowledge the fact that it has a pricey multiple, and it always has really, always has
Yeah.
had. So, but I like it. I think it's a great business, and I don't need to like the leader. I don't dislike him, but certainly he's not man of the week, considering this Christmas is on the horizon.
Yeah. Okay. All right. Moving on. We're just going to give a quick reminder from our friends at Vodafone Business. They're sponsors of Stock Club. So check out their free one-to-one digital support and advice service today to discuss a range of topics from social media tips, cybersecurity, and building a website for your business. Search Vodafone VHub or go to the link in our show notes for today's episode.
Just go in and talk to them. Walk into a shop and talk to them. There you go. Ask them about VHub. There you go.
All right, Emmett.
Easy.
Easy. It's been a while, but we had a few different things you wanted to cover. So we're bringing back
Yeah.
big deal or no big deal, and we're going to get a few of them
Oh
out
yeah.
very quickly. So
Right.
you're kicking off with Zuckerberg. He sold shares in Facebook for the first time in 2 years, offloading just shy of 200 million's worth. Big deal or no big
Yeah.
deal?
Yeah, well, insider stock purchases and sales are often considered a valuable signal for investors, as these individuals are presumed to have access to non public information that could affect a company's future stock price. However, the relationship between insider trading and then the subsequent stock price performance is actually very complex, and it's not always so straightforward. And there's been so many academic studies investigating the relationship between an insider like Zuckerberg buying or selling a share and then the subsequent performance. And we could spend an entire episode discussing those findings. But sticking to the question for once, I'm going to say this is no big deal. As of December 2023, now Zuckerberg's net worth is estimated to be about $115 billion by Forbes, making him the seventh richest person in the world. So if anyone thinks him taking 190 million off the
Mm,
table carries significance, they're wrong. Like, he and his wife Priscilla have vowed to donate 99% of all of their Meta shares to good causes during their lifetime, which you have to admire. And also, I love hearing that because they need to do it in public so others follow their lead. But that's another discussion. So I think 190 million is as newsworthy as me donating, $10 to a charity. It's no big deal whatsoever, and it's a good question, but it's also worth just realizing how insignificant this is against the man's wealth.
I think the big deal was him actually not selling for 2 years. Have you looked at the stock
Yeah,
chart between
yeah,
November 21 and November 23? And
yeah,
it's almost a perfect curve.
yeah,
Like he clearly decided in his head, well, all these CEOs have some sort of selling plan because they're
yeah,
worth so much. Is more than 100 billion worth of Facebook shares. So he clearly decided, well, no, I'm not selling at that value because I feel like that's undervalued. And it didn't come back until it was basically at the same price. I think it was 340 in November of 21 and it's 320 yesterday, November
yeah,
23. So I thought
yeah.
that was really impressive. And it looked just like, oh, well, I'll only sell my shares when I think they're of a fair value.
No, fair point. And when you look at these business leaders, the founding CEOs who are household names, generally they'll say and do things that the voting public will go against. Like, obviously Elon Musk being the extreme example, but like Zuckerberg renaming the business to Meta and pegging I presume 20 or 30-year vision down to say, look, we're moving towards the metaverse and I'm going to get ahead of the curve. And the stock took that hammering that you described, and he stood steadfast, I suppose, and in his resolve. And now we've all accepted the business called Meta. I think most people have accepted the metaverse will creep in. It mightn't arrive this or next year. Definitely won't arrive this year in force. And he, again, through his inaction by not selling any shares, there was a signal, but it's almost an invisible signal. How can you,
Mm.
take something from something that didn't happen? But there is something in that, Mike. Okay, look, before I get too off the reservation, I'm going to hit you with, I suppose, the hottest news at the moment, which is Grand Theft Auto 6. But rolling back a bit, Netflix has launched its Grand Theft Auto trilogy for free, along with 80 other games. Is that a deal or no big deal?
Yeah, I love this. Just the timing, both for Netflix and Take Two. So basically,
Mm,
Netflix from next week, December 14th, you can play Grand Theft Auto 3, Grand Theft Auto Vice City, and Grand Theft Auto San Andreas on your Netflix app. No extra cost for subscribers. As you said, there's already been 80 plus games within Netflix that you can play, but I think this really kicks it off. They're obviously going to be the highest profile names, but it's also adding to the excitement of the launch of Grand Theft Auto 6. And it's unbelievable marketing play from Take Two, I think, but it's also kicking off Netflix gaming ventures into, I wouldn't say overdrive because I don't think they have been really driving yet. It's kind of crawling so
yeah,
far, but now
yeah,
it's really being like, all right, this is our intention and this is what we can do. So I'm going to say a big deal. There's a quote
yeah.
from the co-CEO Greg Peters. He said it in the Q3 earnings call, talking about gaming and just the quest to keep people and their users engaged, basically. So it says, our job is to incrementally scale to the place where games have a material impact on the business. We've got ambitious plans here. We really want to grow our engagement by many multiples of where it is today over the next handful of years. So
Mm.
they're seeing where the puck is going in a sense, and they realize that they have the distribution, they have the scale, but also people aren't just watching TV on their phones. So how can we use the fact that we're in basically everyone's pockets?
Oh
And this
yeah.
this is a very natural segue into it. And when they first mentioned it, it didn't really have much momentum because there was nothing like this on it. But now I
Mm,
think we're going to
mm.
see a lot more people pick up
Oh yeah.
their phones, start playing San Andreas, on the
Yeah.
subway or on their
Yeah.
commutes. I think it's a
I
great
mean,
move.
yeah, I agree with you. I mean, these are some of the biggest titles in gaming history. The Grand Theft Auto Vice City was a game changer. I remember at the time you could buy the soundtrack when CDs were a thing, and it was a 6 CD set. They'd kind of secured the distribution rights for a whole bunch of 80 bangers and also 70 bangers. And I love that word, bangers. But they also had they had actors like Ray Liotta voice one of the characters, and like known Hollywood players in the game,
Yeah.
and it was a real seminal moment in gaming where they'd absolutely maxed out the chipsets, the acting, the sounds, the whole lot, and now it's down into the phone. Can you play it on the TV app? I wonder, or does it have to be the mobile phone app?
I'm not sure what the controls would be
Yeah,
on your TV app, but I'm sure you
yeah.
could figure out a way. Yeah.
We had a fun thought exercise on our live show, and
Oh,
being
just
as we just
before we move on, we have to give credit to Bill Mann at our
oh
live
yeah,
show. So when we were,
oh great minds, yeah.
yeah, similar to the question we're just about to ask, when we were at our live show, Bill Mann said, "I wouldn't mind seeing Netflix buy Take Two Interactive," and I'd say
Unbelievable.
what 2 weeks later we see Take Two's game Grand Theft Auto all over Netflix.
I've
So
been meaning to text him to ask him, how did you like, come on, that's like,
a
honestly, like
bit
that
of
he sat on
a
stage
bit
and
of
said, I
insider
recommend.
trading, maybe.
Hold on, like you're right. He said Netflix will probably buy Take Two Interactive. We had a good chat about it, and that knocked my socks off when I saw the announcement from Netflix only 2 weeks later. I just wondered, where's
Yeah.
this
So
guy's crystal ball hidden? Right
hopefully
on
his
that subject.
hopefully his ears are
Go.
burning listening to this show now.
um, right. On that, then. So, Mike, just a one-way question. You're not allowed to ask me. Well, you can if you want, but let's just go. Name an acquisition that you think might happen in 2024. You had a good one on the night. I suppose you can regurgitate that.
Yeah, I think Disney is going to. It mightn't be its first intention, but I think we might see ESPN getting offloaded.
Mm,
Um, it was, I said, in Q3, it just started reporting ESPN revenue separately. So
mm,
that could be it, putting it in the shop window. Do you know what I mean?
yeah,
It has to free up 8 billion quid to fulfill its acquisition of Hulu from Comcast fully. So at the
yeah,
minute, I think Disney owns 2/3 of Hulu and Comcast owns the last third. And there was a long term contract which basically saw Disney agree to buy the rest of it from Comcast eventually. I think that's happening next year. We've already seen Iger offload some assets. I think is looking to sell ABC News. He's looking to sell Disney's operations in India. But I think in terms of if you were someone going and buying companies, you would look at ESPN as the one you want. And
Yeah.
I think Netflix would love to buy it, but I don't think it has the firepower. I don't think there are many companies that actually do have the firepower when it comes to the cost of sports rights these days. The NFL, the NBA, we've seen Google, we've seen Amazon get involved, and it goes into the billions very quickly. And if that's
Mhm.
ESPN's whole business, it gets very expensive. So there are only a certain amount of companies that can actually, they could afford to buy ESPN, but to run it in that sense. So I think anyone of Apple, Google, or Amazon could all be in the mix. They've all splashed out in live sports recently, and it's that one area of entertainment, we'll say, that tech hasn't really got involved in. It's dipped the toe in recent years. We've seen Google and Amazon with the NFL, Apple with the MLS, but maybe that's just the litmus test to see, all right, can we actually do this? So yeah, I think ESPN might be on the chopping block, and I think it'll be a very interesting asset, especially for those companies. And it goes into what you said, where maybe it mightn't be purely for profit when we mentioned about buying Spotify, but it's about reach, and it's about kind of how involved these companies can be in everyone's day-to-day lives. And I think it was a stat from last year or the year before where 49 of the top 50 watched bits of TV were NFL games.
Wow.
So just,
Wow.
yeah, the
Yes,
cultural
that rings a
significance.
bell. Amazing. When you lived in America, did you have a subscription to ESPN? Was it a subscribe? It is a subscribe service, is it?
There's ESPN Plus, but no, like to
Oh, I see.
watch
It's just on TV.
ESPN, it would be part of the cable channels. But
Gotcha. I see. Okay.
if Apple owns that, then it's on Apple TV. Do you know what I mean? Like,
For
isn't
sure.
it? It's a big
Yeah.
opportunity there. So, yeah, I
Yeah.
think that could be a realistic acquisition to happen next year. And I think Disney might need some cash, and they're looking
Yeah.
at a lot of different routes. Maybe that's where they
Yeah.
get their best offer.
Interesting. I mean, I saw recently, like Netflix had the Netflix Open, was it the Las Vegas golf game? Was
Oh, the
that called
golf
the
thing.
Netflix
Yeah,
Open?
yeah, yeah. That's
And they've all tested the whole sports on their platform thing, and it so far hasn't just looked or felt right. I know it's hard to describe, but that golf coverage just didn't look the same as you'd see on regular telly, as you'd say at home.
yeah, yeah.
You know,
No, that's kind of
yeah.
Netflix, because Netflix has the F1 show and the golf show. So I think they're just trying to combine it together. But I
I
think
see.
like Amazon Prime has Thursday Night Football now, and I think
Mm,
YouTube bought NFL Sunday Ticket. Both paid
mm,
billions for it, so I
mm,
think it could be in their wheelhouse. There'd be a lot of convincing on
mm.
both sides, but
Yeah,
If Disney wants some cash, that's what I'd be much more interested in ESPN than ABC News. Do you know what I mean?
yeah, for sure.
Yeah.
Right, Mike. I think that concludes our conversation for today.
I'm just going to give a quick shout out again to our friends at Vodafone Business. If you're a business owner in need of a leg up when it comes to your digital transformation, just get yourself over to Vodafone B Hub and book your appointment today. So find the link in the show notes for more details.
Just
Emmett,
go in and
thank,
talk to them. Just go in and talk to them.
just go in and talk to them. Go in and badger someone trying to sell you an iPhone.
Stand at the side. Just stand at the side there, and he'll be over to you in a minute. That's what I found. All right.
All right. Emmet, thanks for joining me, and thanks everyone for listening in. Remember, if you have any elevator pitches you'd like us to tackle, get in touch on Twitter at MyWallStreet HQ, on TikTok at MyWallStreet, or simply just email us at pod@MyWallStreet.com. If you're enjoying the show, leave us a review and share us with your friends. We will talk to you next week.